Hi and welcome to the Market Alert for Wednesday, the 11th of June 2025. So US stocks edged higher as US-China trade talks remained focused ahead of today's CPI numbers. That's what the market's focused on today. Stocks bid and bonds flat ahead of CPI. So there's a lot surrounding the CPI numbers today. And the preview yesterday, the first real test of tariff pass through. So expecting only limited impact in tomorrow's, obviously today's, print from the tariffs. This is where the impact is supposed to start taking place. Just a 5 basis point boost to core CPI. Impact of tariffs should grow in future reports. So basically they're just saying that the core CPI is likely to grow with these tariffs that are being imposed. Well, you don't have to be an economist to work that one out, do you? So let's see what happens at 1:30. So the forecast is the core CPI is to show 0.3 increase. Previous was 0.2. And then we've got the month-on-month as well, which is coming out more or less the same. Well, it is the same. And then we've got a slight increase there of 0.2. So let's see what happens at 1:30. Let's have a look at the markets for yesterday. They're all fairly quietish, apart from the DAX, which had a bit of a down day, bit of a pullback. But let's kick off with the Dow and work our way through as we normally do. So in the Dow yesterday, we can see the market stuck in this sideways range, still struggling to try and break the 42924 level there. Overnight, there is some weakness as well, where prices have come back down towards the 5-bar moving average, but everything depends on those CPI numbers to be released later today. The market moved sharply lower to begin with yesterday morning, dragging the DAX down. The market then managed to bounce when the cash market opened, despite a bit of selling for the first part of the 30-minute bar. And then we saw some more selling, but finding support at the DP before we went on to touch Monday's high. At the moment, the market is sideways, trying to get back above the DP there. And in the German DAX, we had a couple of days where the markets managed to break the previous bar's low and close, and also below the 5-bar moving average. Finding a bit of support there, just coming into the market. If we look at that in the 30-minute chart, you'll see prices are starting to move back to the upside and back to the low. If we can get the market back above the low, there's a good chance we can move back to yesterday's high, particularly with the release of those CPI numbers. So at the moment, it's important that we get back above the low and we stay back above the low, and also the 20-bar moving average there in the German DAX. So in the S&P, the market continuing to move higher. 6051 is the target that we need to break at the moment. And then we've got the 6147. Again, rising highs, taking out the previous day's high, is looking quite strong for this market. 30-minute chart, very similar to the Dow yesterday. The market kicking off with some profit taking. You can see them buying back in here, moving prices up. We had a bit of selling at 230 with the cash market, but we soon turned things around and moved back to the upside. The high being taken out after the close of trade in the cash market last night, reverting back to the electronic market. At the moment, we're sitting at the DP level there. So in the FT100, prices continuing to move to the upside. There was a lot of trying to pump the market up to the all-time high yesterday. If you have a look at this on Sky News, M&S and house builders rally, but FTSE misses record. That's for the moment. Let's see what happens during today. So 8910 is the target. It's unbelievable, as I keep saying, how this market is where it is, but there's a complete disconnect from reality now with all of these markets. And the 30-minute chart, you can see there how they rallied the market up, just because Marks and Spencer had sorted out their website, which had been offline since April after it was hacked. Incredible, isn't it? That's enough news to move the markets. It's just an excuse. I remember back in the day, back in the 90s, early 90s, it was completely different. Obviously, there wasn't the internet or the technology. And what would happen is that the floor traders, when everything was still traded manually, as it were, that the FT would phone a trader and say, well, what happened today, to justify it, and they could give any reason whatsoever, and it would be printed. And that's the same now. It's just easier to obtain the information. Let's have a look at the US dollar. US dollar moving back to the upside there, bit of a bounce. I'd expect this, especially if inflation actually shows an increase, to support the US dollar, because obviously then they can't cut rates. So expect a bit of a bounce in the US dollar going forward, which means there's going to be pressure on the metals markets as well. So let's have a look at those. So at the moment, silver is showing an inside bar for yesterday. We didn't break the 36.88. Expect a bit of a down day today with those CPI numbers coming in at 1:30. And there you can see yesterday, you can't help themselves, can they? They still got to slam the price in the afternoon with the LBMA's assistance and JP Morgan and co. Market has been sideways overnight. I'm expecting this to retest the low, just simply because we've got those CPI numbers. Meanwhile, gold is starting to move to the upside. It's a different animal for the reasons of CPI numbers today. So it's starting to move back to the upside, which is going to have an impact on the gold-silver ratio, which we'll take a look at in just a second. Meanwhile, the 30-minute gold chart has traded up to the 200 MA there. So the gold-silver ratio, as I mentioned before, we have this gap. It needs to be filled. Today could be the day that the market actually fills this gap, and we see the gold-silver ratio moving back. It's already starting to move up. So again, I wouldn't be surprised at all to see silver down today and gold up, with that prospect of an increase in inflation numbers, particularly if they come out higher than forecast. So let's have a look at yesterday's trades. So in the pre-market session, we had a bit of a hammering. Just after 7 a.m, prices moved sharply lower there, which you can see, and then found a bit of support and brought the market back. So that was, for whatever reason, I don't know, but it just dropped. And then prices found support before we then saw further selling when we kicked off at the open there. They tried to buy it back, but as you'll see in a moment, prices tried sideways to higher and then eventually relented. So we had a potential buy signal. This wasn't followed by a sell signal, which closed out the buy signal, and then down we went for some time. As you can see, we came back off the low. As you'll see down there, we've got some volume coming in, but then we broke, and then you see there massive buying support coming in, and then the market trading sideways before again going to the 20 bar moving average and moving back to the downside through the mid-morning, and then the Dow coming on stream. And again, once we see the market moving sideways to lower, buying coming in once more, and then prices sideways to higher, and then another exactly the same pattern as we had in the morning. Successful short followed by a long that failed, and then the market moving down there once more, as we can see the averages changing and prices moving lower. So what's it looking like overnight? Well, at the moment, we're back to the low, which is good, but can it hold? That's the question. And again, with the CPI numbers out at 1:30, I suspect that we're going to see a bit of a sideways trading session during today. Right, let's see what those numbers are when they come out at 1:30. And with that, have a great day. And as ever, thanks for watching. See you in the next one.